Hey everyone, and welcome back to Data Driven Value, where we show you the tools and teach you the skills to help you take your financial freedom into your own hands. So, a little bit different video today. I'm just going to talk more about kind of my background in terms of education, as well as my kind of investment journey, how I got to where I am today, and why I think that the things that I want to teach you in this channel are really important, especially as an investor. And then, if we're able to kind of put aside that time and prioritize these things, then we're going to be able to get an advantage in these markets, as well as kind of just really help us achieve our goals. So for me, a big thing is financial freedom. And when I talk about financial freedom in my mind, it's the ability to do what you want to do when you want to do it. I know it sounds very simple, but that kind of being said, whether your form of financial freedom is owning a big house paid off and not having to work, that kind of thing, or maybe it's living in a cabin in the woods and immersing yourself in nature, not having to work that 9 to 5. That's kind of what it comes down to. Really just kind of trying to open up the amount of time we have to do the things we really want to do, because I've learned a lot of things kind of through different life experiences, through traveling and whatnot. Met a lot of different people in a lot of different scenarios, and kind of come to the conclusion that a lot of people kind of have these regrets later in their life. They wish they prioritized different things. They wish they spent more time with their loved ones or their family. So that's kind of why I got to the point of where I am today, is I don't want to have these regrets later on in life. I really want to prioritize the things that are most important to me. And then as long as you're willing to work hard, put in the effort, put in the time, I think we can be successful in this journey. It's worked out very well for me. It has been a long journey. That being said, I've spent countless hours researching, learning. I'm always trying to learn more. So it's not like it just comes easy. I have spent years and years essentially just studying and learning, but kind of getting to the point of where I am now, and recognizing that I'm able to now kind of teach some of these concepts that I've been learning over the years to other people who are interested in getting into investing. So I think it's really powerful for young people to start investing very early and really doing it from a very kind of a smart perspective here. So a lot of people, when they come into investing, there's all kinds of ways to do it. You might just put all your money into the market at once. That can bite you in the butt. Alternatively, just putting all your money into a certain asset, that can bite you in the butt as well. So kind of we just want to make sure that we're not kind of buying into a really risky asset at a risky time. So just by learning different concepts, different ways to kind of analyze these assets, we can really kind of determine what are the most probable and most kind of best risk adjusted entries. So when I talk about risk adjusted positions, essentially I'm just meaning with every investment there comes a level of risk, usually in terms of volatility. So kind of especially in Bitcoin and crypto, you see it's highly volatile. There will be major swings up and down. Whereas you get into the traditional stock market, it's a little bit less volatile. So you kind of figure out what's your risk tolerance, how much are you kind of willing to stomach, and what kind of exposure you want in each asset class. But we'll get more into that kind of later on. I talk about kind of portfolio structuring as well as the different assets and asset classes in many other videos. But today, I'm just going to get into kind of my journey as an investor. So, started way back. Obviously, graduated high school, went to college for computer systems technology. Ultimately, it's kind of funny. I decided that I didn't want to spend my life behind a desk. I do still really like coding. I really like graphic design, that kind of thing. But it wasn't something for me personally at the time. I didn't see myself being a coder as a full time 9 to 5. So going from there, I ended up kind of entering the workforce and kind of took a bit of a 180. Ended up working in the gold mining industry. So I was lucky enough, just with a few connections, I was able to get a really good, pretty high paying job relative to what other people of my kind of my background there, as well as my age and experience. It was a very enticing job. Good pay. I was working away from home, so I didn't have many expenses. I was saving a lot of money, so that's kind of the beauty of that. I was able to work really hard and save money every single year. Essentially, I did that for about 8 years, and yeah, it was a lot of work. It was super hard work, very rewarding, and it did set me up with this amount of money that I now had in savings. So I kind of got to the point though where I started to really feel the effects of having to work away from your family. It's very taxing on relationships to, not be with each other all the time. Anyone who's been in a long distance relationship knows what I'm talking about. It's really hard. I watch so many people in the same industry just watch their relationships and their families fall apart because of their prioritizing that work over family. And for me, it was always family over work, right? So I would work these jobs so that I could take time off to spend with my family, not the other way around. So kind of we got to a certain point. My fiance was very understanding, and yeah, it was tough. We spent years essentially being apart for long periods of the year, not knowing when you're going to see each other. And it's hard. It's hard on a relationship. And it got to a point where I just didn't want to do that anymore. And I was looking for kind of alternative ways to, earn a living, be able to kind of spend more time doing the things I love, spending time with the ones I love. So that's when it kind of got into investing. Another thing, I really can kind of give credit to my fiance. She really kicked me in the butt, got me into investing, really looking into it. Previously, I just had all this savings sitting in a regular savings account, so earning a little bit of interest, but not keeping up with inflation, definitely, and not, yeah. So that's kind of where you're losing money when you realize that a traditional savings account does not keep up with the inflation rate. You just realize that your money's actually losing its value the longer you hold it in kind of traditional savings accounts. That's where you really want to get into investing, because we want to outperform inflation. And then if we can outperform inflation and kind of perform similarly to the stock market, generally in the grand scheme of things, the stock market just trends up and to the right. There are periods of large retracements, like recessions. These generally are very good buying opportunities. We call them generational buying opportunities, and they've kind of only come around every 10 years or so, something like that. So we see 20 to 30% corrections in the stock market. We're definitely looking at buying those, in my opinion. But again, that's kind of what we're talking about, is you don't want to buy into an overheated chart or a kind of an overheated stock market if there's other worrying economic factors present. So again, what I'm going to teach you is just to give us a broad view of what's going on in the overall market, so the macro side of things, as well as looking at the specific assets that we're interested in, and then really just coming up with a plan, because that's going to remove the emotion. And emotion is what's going to wreck you as an investor in the long run. It's what's going to cause you to FOMO in when things are hot, and it's what's going to cause you to capitulate or sell when you go down, unfortunately. And I've seen so many investors do this. I've done it myself. I've learned from it. So that's what I'm here to do today and going forward with this channel, is I want to teach you the things that I've learned over the years. It's been a long journey, kind of starting from 2017, then getting really into Bitcoin and crypto around 2018. I started getting into Bitcoin mining kind of around the same time. And then I've just been, it's just been a passion of mine ever since. I used to just spend all this time researching different things. I'm a research bug at heart. But when it came down to it, the things I was researching were not beneficial to me in a direct sense. I was learning about different hobbies, which is fun. But that being said, I want to spend my time doing these hobbies. I don't want to spend my time researching these hobbies. So basically, I found I was wasting time researching useless things. I was also wasting time on social media. So essentially what I did was cut all this wasted time and divert it to learning how to invest, essentially. And it doesn't come easy. There's a lot to grasp when you're getting into investing. Like, even just the act of getting set up to invest can be very complicated for some people. That being said, there's tons of awesome platforms now that really just make that barrier to entry a lot lower. So yeah, tons of options where you can really get into investing. But yeah, we don't want to go in blind. We want to ensure that we're not kind of FOMOing in. So again, when you get into investing, you'll start looking at, you'll look for recommendations from people. So that being said, often when you get those recommendations, they're generally at a point where they're so well known that they might be too overheated, and you might actually be buying into kind of a resistance before there's a downtrend or something like that. So again, we just follow things based on a fundamental perspective first. So looking at the intrinsic value of an asset, and then we go in from a technical perspective second. So we can really just base our entry on a good technical backing, where we're not going to buy into some of those more overheated times, and maybe we end up having to kind of ride that downtrend before we're actually able to kind of reverse and really realize some of the gains. So again, it's really all about coming up with a plan, managing your emotion, and then executing that plan as the time comes. So since then, essentially, I've just been learning over the years. At first, I was focused mostly on the fundamental side of things. Again, it's a lot to grasp at once, so really focusing your energy on kind of one thing at a time, potentially, and just getting it down. So focusing on the fundamentals first. Once I felt that I had a good grasp on kind of how to identify a strong fundamental company, then I kind of started looking at learning the more technical side of things. So that's looking at charts. Charts are essentially just a visualization of an asset's price action. And an asset's price action is just representing what people will buy and sell that asset for. So there's ways we can look at charts essentially where we can look at levels of probable resistance and support. So that's generally where price is going to go up. When you hit resistance, lots of times you're going to reject and come back down and retest lower levels. So that's why we pay attention to charts, because we don't want to buy high, we don't want to buy into resistance, and we don't want to buy into a downtrend. So learning the technical aspect of technical aspect side of things really helps kind of mitigate that chance that we do see kind of a wrong move. We get caught on the wrong side of a move. That being said, I know we're going to get caught on the wrong side of moves. It's part of investing, and that's why we come up with our strategy, and we don't base our choices on emotion. So, yeah, we're just basing ourselves in strong fundamental assets at good relative valuations. And by focusing on the fundamental side and then coming in with a technical perspective, we can really kind of sway those odds in our favor. And then we reap the rewards to the upside by kind of riding out the uptrends. So there's a lot of different tools, a lot of different data that I'm going to teach you. I try to provide all kinds of different educational resources for you to reference as well. And I'm always available if you ever want to message me, if you have any questions, you need further clarification, or you want a certain request of type of video. I want to bring you the content that you guys want, and I really want to teach you guys as much as possible kind of about really taking your financial freedom into your own hands. So for me, again, that's just been learning to invest and really focusing all my time, all my free time and energy on kind of growing my own investments, as well as learning more and more and positioning myself for the future. So it's really provided me a lot of freedom in terms of time. I'm able to kind of do the things that I want. I'm able to work or not work as little or as much as I want. And yeah, it's just really given me that freedom that I've looked for. That being said, we're all trying to achieve our own different kinds of freedom, and I understand we all have different goals. So hopefully you can come to my channel, learn something new. I'll show you some tools, I'll teach you some skills, and I'll show you kind of my approach to the markets. And then going forward, we can all kind of collectively build a more knowledgeable community. Again, I think there's so much value in learning these skills, especially as a young person, as a young investor. It's really going to give you that head start in the long run, especially with the way the money is being printed these days and inflation. It's more important than ever to really outperform inflation. Otherwise, your money is actually losing its value in the long term. So that's not what we want to see. We want to save for the future. We don't want to see our savings just being eaten away by inflationary costs over the years. So again, hopefully you can come learn something new, maybe spark an interest in investing in yourself. I highly recommend at least looking into it, learn a little bit. And if all you can afford is 20 bucks a week, or maybe 100 bucks a month, or maybe it's only 10 bucks a week, it's all going to make a huge difference in the future, and it's going to really help you with that discipline. So look for places you can save money in your everyday life. Same thing I did with my time management, I did with my capital management. So if I had, maybe I was wasting money on this or that or the other thing, and I don't need those things. So I'm going to cut that out, and then I'm going to move those funds that I was previously using every month for whatever I want, for whatever that was, and then now I'm just going to invest those. So it's really all about prioritizing your time, prioritizing your use of capital, and then coming up with a system or a strategy to really remove the emotion behind investing. And then we just follow through with our strategy at the end of the day, and then we wait patiently. And again, as I said, generally the markets trend up and to the right. As I said, though, there is the opportunity for large retracements, generally come with recessions or recessionary scares. That being said, talk to anyone who sold their stocks during the dot-com bubble, during the great financial crisis, during the COVID crash. Anyone who sold their assets during those major crashes, when things seemed like they were the worst and like the whole world was going to go into collapse, And guess what? Those assets recovered and they went to new highs. So if we get a similar opportunity in the future, I'm going to be taking advantage of it. And I hope a lot of young people really are kind of looking into this and they're able to kind of take advantage of it in a similar way, because these are generational buying opportunities potentially in the making, especially given some of the escalations in kind of global macroeconomic conditions right now. We might be due for a lot of volatility in the stock market going forward, and maybe we do see some buying opportunities. So if you follow my channel and if you like the content, even if you just learn something new, if you share, subscribe, I really do appreciate it. I want to bring you the content that you guys want to see. I want to teach you guys as much as I can, as well as kind of just keep broadening my own horizons, really keep learning, as well as, really kind of, yeah, building that community of knowledgeable and kind of smart investors. So again, a lot of people, they get into investing and they don't necessarily do it the smartest way. They're investing in really risky assets, taking on too much risk, and it bites them in the butt. It kind of throws them off, and then they just sell and they're done. They've had it. They can't stomach the loss. So again, I've made these mistakes in the past. I'm here to kind of help you not make the same mistakes, as well as provide you the tools and the analysis that's really helped me kind of change my investment game and really achieve my own form of financial freedom. So thank you guys for watching. If this sounds like anything that may be of interest to you, I'd love for you to check out my channel, give it a like, a share, and subscribe. It all means the world to me. And yeah, I'm excited for this journey going forward and building a very knowledgeable investment community. All right, guys, thanks. Bye.